All right, while we're doing the transition, welcome everybody. We're eager to get this week's session going and see what we can make of this week's trading. We will first start off with Clark. He'll go through news, discuss what's important to pay attention to, help us set up some perspective here. And I think that's probably the best thing to label as a great concept of perspective for what the market's doing or will potentially do. And then from there we'll go to Natalie and then myself, and then we'll just do a recap to make sure that we've covered all our loose ends amongst the three of us, and then we will bid you all a wonderful week and move on with our trading days. We will post all the information. This recording will go online on YouTube, and we will have all of our handouts made available, and we'll go from there. Clark, I turn the time over to you.
All right. Good morning, everyone. Before we get into this week's look at the news, I want to give you a little bit of idea of what happened last week. I shared this in the European Trading Room, so for those from the European Trading Room, it'll be a bit of a review, but for those who have not heard this before, it'll give you some idea of what transpired last week. First off was housing. Multifamily housing starts jumped 111,000 last week, and along that same line, the home builder sentiment index rose to 60, just a little bit a point up, and refinancing applications rose by 3.7%. Now, the takeaway from all of that is that the real estate market in the U.S. is growing. However, it hasn't been as strong as people anticipated. And there's been a shift in the homes that are being built now more to apartment-style multifamily dwellings than to single-person dwellings. That's significant, and I'll explain that a little later as we get into housing information that's coming up this week.
Hey, Clark, let me interject real quick. One thing I forgot to mention is we're going to go the pace that we need to go to cover all the information. If it seems a little fast, don't worry, because you will get the handouts and you will have the recording to watch at your own leisure. Just so that you know that we're not going to sugarcoat anything here. We're going to be very straightforward and just move forward as quickly and effectively as we can.
Okay. Did you miss anything that I just said?
No.
Okay. All right. The second item I wanted to bring up is initial jobless claims totaled 281,000 last week. That was 4,000 less than expected. And it pointed to the fact that the employment picture in the U.S. is continuing to improve. Also last week, New York manufacturing index was 3.9, slightly above the estimate of 3.0. And along with that, U.S. industrial production in June rose 0.3% month over month, 1/10 more than expected. So manufacturing is also improving. Now, that's not the whole picture, though. There are some negatives in regard to manufacturing, which I'll get to in a minute. Retail sales, industrial production, fixed asset investment, and second quarter GDP, gross domestic product, in China also came in better than expected. However, it was not enough to move the Aussie much, and the market didn't really take that into major account going forward. Coupled with that, Chinese credit growth spiked in June with a 1.86 trillion yuan new loans extended. We'll get into China in just a little bit. Also in China, exports rose by 2.8% year over year. Now, why do we even care about China? Because it's the second largest economy in the world. That's why. It affects everybody. So that's important to keep in mind. In the UK, weekly earnings rose by 2.8% year over year. The UK CPI, Computer Price Index, which is a major inflation printout, came in at 0. However, the core CPI rose by 0.8%. Now, Mark Carney, the chairman, the governor of the Bank of England, doesn't like the low interest rates that, but the consumers do, and their expenditures show it. They've been spending more than has been anticipated. There were some other positives for the market in short term, but the Europeans kicking the can of the Greece drama down the road caused the euro to continue short. On the negative side, a lot of analysts, including Stanley Fischer, believes that the interest rate is too low and that it needs to improve to at least 2%, and that puts some weight on FOMC going forward. U.S. retail sales in June were soft, and also small business optimism fell to 94.1 in June, which was a pretty big drop from 98.3. Philly manufacturing index also fell to 5.7 from 15.2. That was a big drop. And so not all manufacturing news was positive last week. There was a mixed bag of information in the U.S. MBA said purchase applications for to buy new homes also fell. So there were some negatives even in the real estate market. The preliminary U of M confidence index fell by 3 points last week. And there was also an unexpected drop in the number of employed in the UK. Their numbers have been pretty decent of late, but even employment in the UK fell last month. The European Union industrial production also fell last month. So that's kind of a wrap-up of the pros and cons that occurred last week. Moving forward, as we start to consider what's going to happen this week, I want to bring up 2 or 3 items before we get into the calendar. And the reason for this is that the calendar is fairly weak on news this week. That's W-E-A-K versus W-E-E-K. Not a lot of news coming out, but what is coming out is fairly volatile. So despite the fact that the amount of news coming out is not huge, the volatility in the market is going to continue going forward. Now, I want to point out Act 2 of the Greek drama as it unfolds here, keep you abreast of what's happening, because both Greece and China are kind of on the back burner at this point. And the reason for that is it's not headline news. It is stopped being quite as aggressive as it has been in the past. So we'll start out and we'll talk about the fact that the banks will reopen today, or have already reopened today. However, and this follows last week's acts where the Tsipras party, headed by Prime Minister, or the Syriza party headed by Prime Minister Tsipras, agreed to the capitulation to pretty much all of the demands that the European creditors had put on Greece. That was contrary to his own party's wishes and contrary to the majority of the people in Greece who got him elected on the platform that he was not going to accept additional austerity. Well, unfortunately, if things progress the way that the Europeans would like to have it progress, austerity is going to become even worse in Greece going forward. So what has happened here is there has been a lot of dissent in his own party. So Tsipras has rebuilt his government to shore up support for a bailout agreed with the country's creditors. This was done by replacing certain Syriza ministers who voted against the agreement with more moderate officers. Most capital controls in the banks, even though they're open, will continue. However, the cumulative limit has been risen to 420 euros a week. And if you multiply 7 times 6, you're going to get 7 times 60, you're going to get 420. Well, that's 7 days at 60 euros a day as opposed to 5. That's the difference. All right. Tsipras and creditors agreed to a bailout program, and Greece lawmakers approved the legislation needed to release funding for the country. Hours after the vote, the European Central Bank approved emergency financing for the country's lenders, and the European Union finalized a bridge loan on Friday to provide a stopgap until a 3-year rescue plan worth as much as 86 billion euros is settled. So what in essence has happened is the Greek government has agreed to the austerity measures that the European creditors have put on it, and all this does is get them back to the negotiating table to come up with a bailout program that is not in place yet. It's probably going to take 2-3 weeks at least for it to all be shaken out in order to find out what the final numbers are. However, you'll notice following Thursday's vote, Tsipras told his associates that he would be forced, there's the key word there, to lead a minority government until a final deal with creditors is concluded. In all, 64 of the parliament's 300 lawmakers voted against the bill. Half of the no votes came from Syriza, including the former finance minister, Yanis Varoufakis. Tsipras is being held hostage by both his lawmakers, who refused to vote for the measures, and by the opposition, whose support he needs to pass the measures throughout the parliament. The only way out is re-elections. So I would suspect that once, at some point in the near future, the government's going to go through a whole new election cycle, because the thought is that the new government that he put together based on new ministers will most likely only last a couple of months. German parliament also cleared the way for talks on a third bailout. You notice, cleared the way for talks, not the bailout. Angela Merkel warned that failing to try to get a deal done would be reckless and sow chaos. It doesn't matter what the outcome is. Chaos has already been sowed and will continue to grow. What we are witnessing is European solidarity in action, the European Union Commission Vice President said. Really? What I think, this is personal opinion now, but what I think is Greece has been bullied into accepting additional austerity on the grounds that they'd be kicked out of the Eurozone and they'd lose all of their financing. And Greece is bankrupt and cannot support itself. And if they were to be kicked out of the Eurozone, they'd have to go through many months of extreme pain in putting together a new drachma currency and renegotiating all of the contracts that are in euros now into drachmas. It would be a mess for quite a while. But personally, I think that would have been a better road for Greece to go. The initial pain is much more severe, but the final outcome would allow Greece to grow substantially faster than they're ever going to grow under any kind of contract with the Troika going forward. So that's where we are with Greece today. It's a mess. It's going to continue to be a mess, and it's going to weigh on the euro going forward. I want to say a little bit about China. Again, as most of you know, China has been appreciated. The Chinese stock market has been moving up at a breakneck pace. They literally, depending on which one you're talking about, we're looking at right here the Shanghai Stock Exchange, but there's also one called the Shenzhen Stock Exchange. Shanghai Stock Exchange appreciated about 135% in a year. That is tremendously fast. The Shenzhen stock market appreciated 150%. And so the combination of the two have been on a tear for the last year. So what happens? The stock market crashes because this is a bubble. And it crashed by at least 30% on both stock markets. Now, of late, last couple of weeks or so, the stock market has continued to recoup some of its losses because it literally plunged a third of its total value, and more than $2 trillion in valuation was lost in this stock market crash. Now, a lot of people are saying, well, it's over. We don't have to look at China anymore. They're going to, continue up. Not so fast. The Chinese government went all out last week to stave off an even worse crash with measures including interest rate cuts, stopping all IPOs, less strict margin requirements, threatening to arrest short sellers on the market, letting speculators use their houses as collateral for margin loans and other draconian style measures, such as some of the bigger hedge funds and investment funds have had a freeze put on their accounts such that they are not allowed to sell anything for the next 6 months. So what does all of this mean? It means that China's government is what is preventing it from dropping any further than it already has. It's not an open market like it is in the U.S. What happens is once these measures are released, most likely the stock market is going to drop even further. So you need to keep an eye on this. Now, if in fact these things stay in place and the market jumps above 4,000 to 4,100 resistance zone here, we could see a potential rally, but most likely anything heading short and penetrating past the 3,400 support level is going to cause more of a crash than has already happened. So keep that in mind, because China, despite the news that you may have heard recently, is not as healthy as the headlines would lead you to believe. A lot of the news last week came in fairly well, but it really doesn't tell the whole story, because much of the information is manipulated. Now, as you may have noticed this morning, gold took a real huge hit today. And in the Asian trading session this morning, it plunged to below $1,100 per ounce for the first time since March of 2010. And strategists see the precious metal is only heading lower from here. What you're going to hear me talk about here is how low gold could potentially go, but I need to put some caveats in there, so just stick with me for a minute. Why did this happen? Well, it was triggered by speculative selling in the Shanghai Gold Exchange, and it caught most investors off guard. And the question really comes in, who sold the gold? Nearly 5 tons of gold were sold on the Shanghai Gold Exchange within the space of 2 minutes this morning between 9:29 and 9:30 GMT. The daily volume last week, to put things into perspective, only was about 25 ton. So in 2 minutes, 5 ton was sold, which caused the market to plunge. Now keep in mind, gold and China are linked at the hip. It's interesting to note that China has not released its gold holdings to the public since 2009. And just this last week, they ended that speculation about their holdings by revealing that they had 60% jump in reserves since 2009, going from 1,054 tons to 1,658 tons. Well, those numbers are way understated. Last year even, based on imports of gold through normal channels from other sources, the estimate was that China has gold reserves in the neighborhood of 5,000 ton, not 1,658. Now, why would China do that? Because China does not want to play their hand too early here. Their ultimate goal is to become a reserve currency in the world market, and in order to do that, they have to meet certain requirements that the IMF has put forward, and they can't meet any of them right at the moment. Their market is not open enough, and the yuan is not well used enough, and so there's a number of restrictions that are preventing them from becoming a reserve currency. But part of the reserve currency, or part of their strategy, is to build up their gold reserves to such an extent that they can back their yuan with gold, like the U.S. used to back the dollar with gold, which would make their yuan, once that happens, a much more stable currency than any other currency in the world. So you could look at the gold sell-off today and think to yourself, well, with it being so low, who's going to buy? Well, I would wager to say China is going to be one of the biggest buyers going forward here. as they continue to increase their reserves. So I wanted to just bring you to understand that the gold drop is been a manipulated issue as well. And a lot of people think gold's going to go even lower, which it could. It could go down as low as $980 an ounce. And part of that rationale is based on the Federal Reserve's first rate hike looming and the prospect of a stronger dollar, and the odds remain stacked against gold going forward because of those things. But when gold rallies, it's going to really rally big. And so I wouldn't be shorting gold right now anytime soon, because despite the fact that it could go considerably lower, the better bet would be on longs on gold in the long run. But right now it's too volatile to even trade, in my estimation. All right, so let's get into the news for this coming week. There aren't many items on our list, so it won't take too long. Sunday and Monday today obviously is very weak on news. Most of the news has already happened. The only major item is Canadian wholesale sales, which is not going to be a market mover to any great extent. So we can kind of bypass today. We're going to get some volatility in the market as things come out about Greece, headlines come out about things happening in Europe and what have you. But the minute-to-minute news items are what's really going to be moving the market today. Tomorrow, or I should say tonight, we're going to have monetary policy meeting minutes for Australia. That's not going to be a big market mover either, but it can give you some idea of where Australia thinks that their economy is going. It's well worth taking a look at. Tomorrow's news is going to be fairly sparse as well. And it's interesting to note on weeks like this when there's not a lot of news, some of the medium impact items take on much more weight. And things like the Chinese new loans and the Chinese foreign direct investments, anything related to China, you need to keep an eye on. So despite the fact that there's no major news items coming out on Tuesday, keep an eye on what's happening there in the Asian session particularly. Wednesday will be one of the bigger days of the week. In fact, it'll be the biggest. We already noticed that in Australia we're going to have the minutes come out, but the big ones are the CPI numbers, the trimmed mean CPI, and Governor Stevens speaking here. I would suspect that we're going to he's going to potentially be positioning the market for another rate cut coming very soon. And particularly if the CPI numbers come in lower than anticipated. So watch what he has to say. That will potentially put a lot of volatility in the market. Going forward then into Wednesday, we're having existing home sales. And you'll notice this number is expected to improve. Now these are annualized numbers. 5.4 million homes a year is a lot of homes. And existing home sales are the vast majority of the market. And so it gives an idea of where the market in general is headed. So that will be one to keep an eye on. In the Asian market on Wednesday night, we're going to have the official cash rate and Reserve Bank of New Zealand rate statement. Now, what we need to understand here about New Zealand's central bank rate cut is that they've already cut it once this year, and it's now sitting at 3.25%, one of the highest rates in the world. The Reserve Bank of New Zealand potentially could cut rates again, despite the fact that their economy is doing fairly well. In this morning, as a matter of fact, John Key, who is the Prime Minister of New Zealand, came out and said that New Zealand shouldn't be gloomy about the economic outlook. New Zealand economy is still growing at a good rate, despite the fact that the dollar has fallen faster than expected. He says lower interest rates will help support the economy and is likely to have lower interest rates for a longer period of time than most people believe. And on those comments alone, today's major move in the market have been in the Kiwi pairs. This goes back to the proverb, buy the rumor, sell the fact. And people did. The Kiwi jumped up quite a bit. And so I'm looking for potential shorts on most Kiwi pairs, especially after the bit of a rally that they had on speculation this morning. So if the other thing that's weighing on both Australia and New Zealand is the fact that Canada cut their rate last week. And the three of them are commodities exporters. And when one cuts the rate, the others tend to follow suit in order to stay competitive. So a rate cut is not out of the question going forward on Wednesday. So keep your eye on this. This could be a really good trading opportunity. On Thursday, there are 3 or 4 items that are in red here. Most of them are going to be less stellar than the red color indicates. Retail sales in the UK, not expected to move much. Core retail sales in Canada, again, this is a much bigger move. And if it should happen, Canada's loonie could rally some. But based on what's happening recently in Canada, I think this number might get disappointed. The big one of the day will be the U.S. unemployment claims. Now, the unemployment claims have been dropping substantially over the last few years, and it's at some of its lowest rates since 2000. And it's expected to pick up just a little bit here, but even if it comes in a little higher than previous, it will still point to the fact that the unemployment picture is continuing to improve. So that will be the biggest one on Thursday to keep an eye on. We also have trade balance on the Kiwi, which will give some idea of how their exports are going. Right now they have a surplus, which means that they're exporting more than they're importing. Should that drop further, the Kiwi will most likely head short. On Friday, then, to end up the week, We'll have a couple of major items coming up. Again, one being Chinese, flash manufacturing PMI. Friday is PMI day. You notice most all the items that are going to be printed are PMIs, or which are sentiment indicators, and business climate is also a sentiment indicator. The only real number for the day will be new home sales. I'll talk about that in just a minute. But going back to the flash manufacturing PMI for China, this measures the Chinese economy and could shed a better light on what's going on there. After the positive GDP that came out last week, things might improve some, but again, these numbers are a bit suspect. The fact that the government is behind them does not lend a lot of credence to the numbers, because the government's goal is to prop up the stock market and to prevent any more crash than has already occurred. So I take it with a grain of salt. Unfortunately, the market does not. If that comes in and goes above 50, the market's going to get exuberant, and some of the currency, some of the currencies that are dependent on China for trade, such as Australia and New Zealand, might rally some on a very good number here. So it's one to keep an eye on, because the 50% mark is the difference between contraction and expansion, and right now it's right on the cusp. So watch that one. And the last one for the week is going to be new home sales for the U.S. Now, new home sales is only a small part of all of the home sales. We already talked about existing home sales earlier in the week, but every sale of a new home has a trickle-down effect far greater than an existing home sale, because people that are buying new homes have to potentially put in lawns, buy gardening tools, buy new furniture, et cetera, you know, to set up a new house that has just been recently built is a much bigger undertaking, to the extent that the additional expenditures on a new home can exceed 10% of the value of the home, just to get it up and livable for the individual that is buying it. And so that's going to be one that's watched extremely carefully. It's expected to drop just a little bit, but if this number comes in anywhere near this or better, the dollar could rally some on that news as well. So going forward this week, I just want to point out my take on the currencies in general. U.S. is bullish with further U.S. dollar strengthening. The CAD is bearish, being dragged down by oil and interest rate cuts, and potentially another one even after the one we had last week. Euro is definitely bearish, with the Greek drama continuing to play out and quantitative easing weighing on the euro. The pound is neutral to potentially bearish, but it could go either way. So the most recent moves up last week were due to Carney's cheerleading and his hawkish remarks. That's the only thing that drove the market. The fundamentals were fairly neutral, and it was Carney that moved the pound higher, so we could potentially see some major retracements in the pound going forward. The Swiss franc is dragged along with the euro most of the time, and the Swiss National Bank is doing a lot of intervening in the currency to prevent its valuation from exceeding its goals. They would like to see it around 110 to the euro, but they are having a hard time keeping it there. So Swiss franc is bearish. Aussie bearish. CAD interest rate cut puts weight on the Aussie to cut their interest rate as well, as I've already mentioned, and global slowdown and their internal economy has had a slowdown as well. Kiwi bearish, weaker price in dairy. FOMC delaying their takeoff of interest rate rises, and low inflation are the things that are weighing on the Kiwi this week. And in Japan, I still have a bullish outlook for the yen based on safe haven currency moves and Kuroda's cheerleading that just happened over the weekend. So there you have my forecast for the week for the currencies. That's all I have this morning. So let me change back to Natalie, and she can take over from here.
Okay, thank you very much, Clark. Appreciate that. So what I'd like to do just very quickly is ask, if I do speak too fast, guys, please raise your hand so I can just slow down a little bit. Sometimes I do get quite carried away, so just a request from my side. And then if there's a delay in the screen, I'd like to just please let me know as well. So let's do a recap quickly of last week, and then we'll have a look at the current ones for this week. There's quite a nice list to do, but first what I'd like to do is just have a look at the Aussie CAD. This was on a watch list for quite some time now, and it still is because of the weekly. You can see at the moment it's a weekly chart, and it's still in a beautiful sideways moving market. So the current moment, I'm just waiting for breakouts, setting a lid stop and bottom, and we'll trade accordingly. Quite interesting on the Aussie CAD though is if you look at the daily. I think we do expect a bit of a pullback. We'll probably come and retest the top of the channel, which is the weekly resistance, which corresponds with the 200 moving average on the daily as well. So keep an eye on 4-hour potential divergence or a blood special with a fresh Merck's cross giving us potential to go short. And you can maybe range trade this, sell the top, and then just buy the bottom. So let's look at the other one, Aussie Swiss. We had a 4-hour. Here we go. Last week I said let's have a look at this one. 4-hour divergence or convergence in this case, and as you can see where the green line was, quite a nice trade, and you could have taken this to the closest fractals, and there was about 60 pips counter trend trading to do. Currently I'm in this one long as well, and let's see why. Here we go. That is based on the dailies, also a good watchlist candidate at the moment. Looking at broken a fractal for, there we go, the crosshairs are. And I'm looking just for a small pullback trade on this one. Not a lot of pips, and I think it's just going to give me small pulls, and then we're going to have a continuation down into the downtrend. So let's look at the Aussie New Zealand, which also was a very good watchlist candidate we had last week. Looking at this 4-hour, I drew in the channel which we were watching last week, and as you can see, there was a beautiful breakout, and quite amazing to see how nicely it respected that 200 moving average, and how it pushed away there, broke the fractal with beautiful 4-hour entries, and there were quite a few pips to make, but if we were conservative, it just took it to the fractal. There was 132. So a nice little trade there as well, trend. Looking at the Aussie US dollar was another one. Also watch this candidate. This one went the opposite side. you can see the channel we actually had drawn out, excuse me, and this actually broke with a beautiful setup, but not that much. Stop loss would have been the top of the channel, and that would have given us about 118. You can see it wasn't a great profit loss ratio. It only gave us about 54, 53. If you did put a trailing stop on this of 50 pips, you would have been taken out with 3 pips profit, which is better than actually taking a losing trade, but still, I think there is potential, but we're going to have a look at the watch list and a bit later during the session. Looking at the CAD Swiss, there was also on a watch list due to the daily divergence we have, or convergence. You can see I'm still in this looking for potential longs. This one did not materialize, so this is still watch list material. You can see currently there is a double bottom, quite nicely where the crosshairs are. And I'm watching for this to actually give me fresh move across to the top, which looks like it's going to happen by tomorrow or the latest Wednesday. I'm looking for below special to confirm that. You can see that's doing quite well at the moment, and a break of the fractal with the top green line is, that's going to be where we're going to start looking for potential longs on this one. Other one is the Swiss yen, was also on a watch list. Big reason for this was because we had a fresh move across of the weekly. This one is still in play as well due to, you can see I'm looking for a break of that fractal where the green horizontal line is. If that gives me a practice of that support, then we are pretty good to go as well. Looking at the daily on the Swiss yen, you can see it's got some time to go, but there is a saddle sell, which means that what we can do is we can actually start looking for earlier entries, maybe even if I go to the 4 hour. In this current area, I'm looking for fractals to form. Once I get the fractals, I'll start looking maybe to just take a small little trade from the current levels all the way down to the fractal, either at 124 pips, or you can even drag it a little bit down. But so there's still potential there. Just looking at what the weekly is giving us, we can definitely start looking at was some shorting opportunities of the 4 hour as well as the daily time frame. Looking at the Euro Aussie, there was also quite a nice little trade there. I took quite a few, profited quite nicely out of that due to the 4 hour divergence we had. One of the trades I took in the ETR, I think it was, and you can see there were quite a few little trades that was taken for 1 hour, but also the 4 hour can be divergence heads up for a few pips. Another one at the break of the 4 hour fractals, and down we go. And I think I closed that one manually, I think. And the next one was actually taken also just a very short term of 1 hour and a nice little few pips there just by looking at this divergence. Currently quite important on the Euro Aussie is this is a potential watch list. It's found support of the 4 hour 200 moving average. So this is quite a crucial area. If it is going to continue down, I'd like to see a break of that support as well as a close below the 200 moving average that we have. If you're going to go long, I'd like to actually see, okay, daily is still in play. But if you're going to go long, let me just go back to 4 hour. There's a very tight little range starting to form, and we might actually look at a bit of a longer, a long breakout to at least the closest fractals there, and that's going to give us quite a few pips on the 4 hour. So nice little CDC play there. Looking at the Euro CAD as a recap as well. Now this one we still have the divergence on the daily. This has not been answered yet. As you can see, a beautiful fractal actually formed on Tuesday last week, and that is on this green line you can see, and that is where I've got an order lid set looking for shorts. Very important, below special, fresh move across, confirmation of the divergence, and we time it off a 4 hour 5 long trade. So a nice one still to watch, still taking time to develop. Other one which was on our watch list is the Euro New Zealand, very similar setup here at the moment. You can see the nice range we have on the daily. Also we had here divergence. Here we go. Let me just put that in here. Our highs on the daily, and you can see that I is sloping towards the 0 line. Now, this doesn't happen very often, but this is a classic pattern of what can happen with divergence. Either you can have a very good steady pullback, you can have a continuation of the trend by a saddle buy and a fresh move across to the top, or you can have this moving sideways moving mark like we have right now. So strategy on this one is to set order alerts top and bottom. As you can see, I've marked them out quite nicely on the daily. If it breaks to the bottom, same trading rules, may below a red, 5 alarm of the 4 hour. If it continues long, I'd like to see a break of that resistance area, may above, AO blue, and a 5 alarm on the 4 hour going long. Let's look at the pound Aussie. Now this one actually was one that did not materialize. This was a divergence trade on my watch list. It actually never came and triggered my stop, or my entry would have been, we just draw the line in there. There we go. That would have been my entry target. As you can see, that never happened. So current, and actually this went into a fresh saddle buy. Mayo starts showing strength, and there was a beautiful trade going long on the break of that fractal. So you could have taken this to the long side. I think I missed out on this pound Aussie because I was anticipating the divergence, so I didn't take that. Looking at the pound CAD, very similar setup right there as well. We had anticipated divergence, it was not confirmed, and you can see also our fractal we would have taken for a short would have been the bottom green line. And as you can see, when this actually broke, there was a nice blowout special, saddle buy. May didn't really give me a heads up, but still you could have timed this off the smaller time frames. And there was also a beautiful, beautiful trade towards the long side, which I actually set on the sideline as well due to the anticipation of the divergence of the daily. Looking at the pound Swiss, there was also on our watch list. This one I actually took. Reason being is we were watching this one due to the 200 moving average, and I said on Monday that it would be a good idea to start looking for longs on the break of the fractal where the green horizontal line is if it closed above the 200 moving average. It actually did that, and I closed this out this morning for a few pips right there. So a nice little trade. It's starting to slow down a little bit. What I will be looking for if it does continue long is for fractal to start forming on the daily, and then time it from there to go long once more. Looking at the pound New Zealand was another one. Daily CDC we had. This was actually, you can see it's still in play. It still didn't materialize, and it would have broken. We just go over here. That fractal right there where the bottom green line is. And once again, you see it came pretty close, but didn't give us the good entry we were looking for, which is the break of the fractal support line. And I actually went long on this one. Once again, there we go. Not a perfect entry, quite a good entry of the 4 hour, but just looking at the daily break of the fractal, Mayo was giving me nice off points, as well as the AO giving me some good sell buy, and I think the 4 hour actually gave me a 5 alarm. There we go. So that was a nice little trade right there. Now looking at the New Zealand CAD was another one we had, daily CDC, and once again this one has just gone into a ranging market. No pullbacks there yet, no good trades to take. At this moment it's just ranging. So once again, currently a watchlist candidate, setting tops and bottoms, audio alerts. Otherwise, if we do get some divergence maybe of the 4 hour, you can start looking to sell the top and then just close out the positions once it nears the bottom fractals we have. Looking at the New Zealand Swiss, was also on our watch list. This one, daily CDC, which also did not materialize. You can see it actually continued making lower lows. So I've been on the sideline on New Zealand pairs this week. Quite important as well. This is a watch list, but we'll just briefly go through that again a bit later. At the moment, beautiful sideways moving market on this daily, and audio alert set top and bottom. If it does break out to the top, I'd like to see the Mayo still above, showing some strength. AO should give us below special, which it is right now, and the 4 hour will actually have to give us a 5 alarm, so it's still got a while to go. And quite interesting as well, on this 4 hours to see how the 200 moving average coming in and actually hit that resistance area. So caution advice, guys, about taking aggressive longs on the New Zealand for now. We've got 3 more to go. The US dollar Swiss was a great one. The heads up for us came on this one basically of the weekly fresh mayor cross we had, and I took it on a break for fractal closed out this morning. I'll be looking for re-entries once again. Just a small little trade there, and quite a nice little one that materialized. Next was the US dollar yen, and the reason we were looking here for some good entries was it was playing with a 200 moving average, battling a little bit there, and the heads up was if it does close above, there might be some good entries, which it actually did. So there was a nice little entry, or if you want to be a little bit conservative, small little trade there. It's very, very steadily. There would have been 40 pips right for now. And then last but not least, we were looking at gold last week, and we were actually looking at the weekly and the monthly on this one. I'd like to share with you these 2 trades. This was taken the week before, and then the last trade was taken off a break of that weekly double bottom we had, and it actually stopped me out quite nicely with a take profit target. So once again, the moment the gold is ranging, if I go to, I think, the 1 hour, there we go. 1 hour is a great area right now to start watching, and I'm just going to draw 2 lines. There we go. And there we go. And I'll be watching these 2 areas once again for breakouts and trade accordingly. Great. That was for the watch list that we did last week. Quite a few pips. I did not actually take them, so I counted them all together. But I think it was quite a nice amount that we could have grabbed from that. Looking at what's happening in the rest of this week, I'm going to go over to my charts. And let's start with the Aussie CAD. Like I said, I'm going to go a little bit fast on this, but the Aussie CAD is already one to be watching. Weekly is the beautiful range, so audio alerts set top and bottom of 1, 2, 3. The 4th bar ago, we had fractals, top and bottom, beautiful range there, so waiting for that for breakout. Looking at the Aussie Swiss. Daily convergence we have still. Like I said, I'm in this trade currently looking for longs. If you'd like to, once again, 4 hour is giving some potential entries. If it does break this resistance area with the 1 hour giving a 5 alarm, this might be a good area to take a bit of a counter-trend trade and maybe just take it up to the 200 moving average resistance on the 4 hour. Another one on my watch list at the moment is the Aussie US dollar. If I go to the daily, so I just got, I've lost my lines. Here we have divergence on the daily once again, lower lows. And you can see very, very slightly the AO is trying to show towards the zero line. Very important, it's not been confirmed. So at this moment, order alert is set at the top of the green line, and I'm looking for, if it does break that resistance area, fresh Mayo cross, blue light special, and a 5 along the 4 hour, and we'll take it then up to the fractals for a few pips there. Nice 1-to-1 ratio as well, so worth watching. If it does go short, very important, I'll use the bottom of today. You can see on the 4 hour should be a fractal. There we go. And if it does break down to the bottom once again, blue light special or saddle sell in this case on the A of the 4 hour, and potential of the fresh Mayo cross, and then take it short all the way down. So let's look at the CAD Swiss. Once again, this one is also daily convergence at the moment. So once again, 2 ways it can go. Here we go. If it does break the top fractal where the top green line is, we're looking for fresh Mayo cross, looking for a 5 alarm of the 4 hour. If it breaks the bottom, 2 fractals, I'll be looking for that Mayo to actually cross to the top and then give me a fresh cross downwards, and then a saddle sell to confirm that. Looking at the CAD yen. Okay, I'll have to look for that one a bit later. I don't know where my CAD yen is. Just one moment, let me just scroll over here. Oh, there we go. CAD yen at the moment, this is a tough one for me due to I do not get very good feed. But looking at the 4 hour, just one moment, let me see. Weekly 5 alarm, there we go. We've got a weekly 5 alarm going short on this one. Now due to this setup we've got a heads up that we can at least come and retest the weekly fractal where we have the peach color line. Now if we take it, it's going to be about 90 pips there. So strategy at the moment is on the daily. There's a daily fractal. I've got it at the level of 95,427. It is giving me a saddle sell today as well, but like I said, my data feed at the moment is not 100% correct. So please trade what you see, and it's just going to be a small little trade down to the weekly support if this actually does give me a good break of the fractal as well as then 4 hour 5 alarm trade to confirm. Looking at the Euro Aussie, that's one more on my watch list at the moment. 4 hour is nice range, but like I said, the daily is giving me once again divergence. Divergence usually happens in 3 stages. We have a stage 1 that gives me a downward trend. We have a stage 2, which is usually a nice little pullback, and then we have a stage 3, which is the break of that fractal support and a breakdown to at least the next support, which will be this 200 moving average that we have of the daily. So once again, heads up on this. Audio alert set on the daily fractal. If it does break down there, everything is looking good on the daily. I'd like to confirm this on the 4 hour as well with 5 alarm, and we'll take it down to that 200 moving average for about 200 pips. So nice little watch list on the Euro Aussie. Looking at the Euro CAD, it looks very, very similar. Once again, oops, let's put this on, here we go. Daily is giving divergence. Took a small little trade in that last week due to the 4 hour, but very important though, you can see the Maya is thinking if it wants to actually close, or at the moment it's just toying with a 0 line. So very important, once again, audio alert set at the bottom of that aqua color line, and I'm waiting for a break out there, and then at least take it down to the closest fractal. Quite a few pips there as well. Very important though, confirmation with a 4 hour with a 5 alarm trade. Looking at the Euro Pound, now this one was the surprise of last week. I actually sat on the sideline watching this screaming down. Excellent opportunity would have been right there. I didn't take it due to the Maya being above the 0 line, and currently it's bouncing back. So looking at this Euro Pound at the moment, if I go weekly, you can see it broke some significant support before, and it's 5 alarm. So I'm looking for this to break the low of last week, and at least just from there I'm going to take it short as soon as it gives me some fresh signals. Next one is the Euro New Zealand. Here we go. Once again, like I said, we've already had a look at this one. CDC on this, nothing being confirmed yet. What I'd like to see is a break of where the aqua line is. There was 2 fractals there, and as soon as I get this heads up there, once again, same story as always, fresh 5 alarm or under 4 hour. If it goes to the top, very important about this Euro New Zealand is if I go to the monthly, you can see it's actually hit some heavy resistance there. It has to break out, and it's quite a lot. You can see how often this area has been tested where the crosshairs are. So very, very important though is just keep an eye on that. If you're going to go along with Euro New Zealand, make sure that you don't have any divergence or convergence showing of the 4 hour. That's very, very important. Good, let's have a look at the Euro US. Nice little watch list here on the 4 hour as well. Tight little range, found some nice support of a weekly, and at the moment showing for the 4 hours some convergence. Everything is starting to set up. Maya above, AO blue, where the aqua line is at the top. I've set audio alert there, waiting for break of that fractal. And so it's going to be a short little trade to the previous fractal. That's 43 pips there. So nice little trade potential for us on the 4 hour US dollar going long. If it breaks to the bottom, very important, I'd like to see a 5 alarm of the 4 hour, and I'd like to see the daily actually confirming that. But as you can see on the daily, quite heavy support right where it is at the moment. Good, let's look at the Pound Aussie. There's also 4 hour divergence at the moment. Once again, hit a weekly resistance and pulling back. Same story as always here. Audio alert set on the fractal where the green line is, and I'll be looking here for a break once again of the support area. Everything looks good. MA is below, AO is red, and the 1 hour you can see 5 alarm is not there yet, so it's trying to arrange a little bit, so we'll have to see if this one's going to materialize. If it does break to the top once again, very important is that it confirms with the weekly. You can see weekly is looking quite good. It's still strong. Monthly is looking quite strong as well, and it's pretty fast off from the 200 moving average that serves as resistance on the monthly. So nice one still with upward potential as well as a bit of a pullback on the smaller time frames. Looking at the pound CAD, this is also one of my watch lists due to the 4 hour. Once again, very similar in the pound Aussie, we have your divergence, and audio alert set top and bottom of that 4 hour range that we have. Quite important about the pound CAD, I'd like to just point out very briefly, is that we have a definitely more dominant potential for divergence on this monthly, as well as look where it is when it comes to the 200 moving average. Just going to zoom out a little bit. You can see right there, it's really going to have to break that. It's going to be quite an interesting session, I think, on the pound CAD this week to see if it's going to actually make or continue to make higher highs. As you can see where the maroon color line is, a lot of resistance also ahead if it does close above the 200. So pound CAD, I'm actually a little bit bearish at the moment. We'll have to just see what the 4 hours is going to be able to give us. So looking at the pound Swiss, the next one on my watch list, once again, pretty similar CDC there on the 4 hour. Once again, fractals will be my audio alert, and I'm going to even set one at the top. There we go. Nice little range we have, and once again trade accordingly. If it does break to the top, 5 lock for the 4 hour, daily must confirm, and then we'll take it to the long side as well. Let's look at the next one, pound New Zealand. There you go. Now this one doesn't have any, excuse me, the pound yen. Now this one doesn't have any divergence or convergence, but very important, very nice tight range of the 4 hours. Once again, audio alert set top and bottom, waiting for this to break out within some heads up about with 5 alarms. Looking at the daily, I'd like to at least see an early bird here if I'm going to go short, and on the 4 hour, I'd like to see that 5 alarm just confirming that break. Pound New Zealand is the next one on my watch list. Once again, daily. Nothing being confirmed, but I like the price action I'm seeing right there. We've got potential divergence. I'd like to see a fresh play across here, probably Wednesday, Thursday, that will materialize. Very important, though, is that we get a blue special. And if you look at the 4 hour, this one is pulling back at the moment, but starting to range. So it's up for me at the moment. I've set an audio alert where the peach color line is, looking for shorts when it breaks that support area. Or yeah, there we go. So pound US dollar, just very, very quickly. If I go to the daily, you can see a very, very tight channel starting to form there. I actually was in this, and I closed it out with a bit of a loss, waiting for this to give me a bit more of a clear direction. So once again, audio alert set top and bottom of this little sideways channel we have, and I'll trade accordingly, but just little hits up there. I think a lot of patience will be asked for this week, especially when it comes to the high time frames, guys. Almost a New Zealand yen, here we go. This one is showing potential divergence, or convergence in this case, lower lows on the price. And you can see the AO is actually slipping towards the 0 line. No blue lot special yet, so got to be very, very patient on this one. Wait for the break of that fractal where the top peach color line is, and we'll take longs from there onwards. Looking at the New Zealand US dollar. Once again, very similar of the New Zealand yen. You have lower lows, and it actually hit, if I go to the monthly, you will see it actually hit a monthly resistance with a 200 moving average support, excuse me, on the 200 moving average, and we'll have to see if it's going to actually have the strength to close below that. If it does, on the monthly, we're going to definitely for longer term expect some more downward movement. It really looks like it can still go bearish, but for now, weekly is in a range, and I do expect a bit of a pullback, like I said, on the daily. And we're waiting here for a blood special. And we're waiting for fresh Mayo cross. So quite important on that. And we see 4 hour. There's no fractal at the moment, so I've set in fractal an audio alert on the fractal, which was on the daily, which gave us a support area at the 7th of the 7th of this month. Good. US dollar CAD is the next one. 4 hour divergence again. And once here, very, very tight range. Great one for a watch list. If it does break down, we're looking for a 5 alarm of the 1 hour. If it breaks up, I'd like to see a blue light special, fresh Mayo cross on the 4 hour and the daily to confirm that. Very important about the US dollar CAD as well, guys, is if I just squash this in a little bit, you'll see it's heading into some major resistance. So just be cautious if you're going to take something for a longer term. Be very, very aware of where it's heading, because you can see every time it's headed up to this area, we've had some very, very strong price rejection every single time. So just a caution and of advice from my side, don't go and leave it for 3 or 4 or 5 weeks. I'm not sure if it's going to actually be able to break this long we have here, or this resistance area. Then last but not least, just going to recap quickly on the gold. Nice sideways channel starting to form there as well. Let's set the top and bottom, and I'm waiting for breakouts on the gold. Great, that's it. Any questions we have? Jed, can I give it over to you?
Yes.
Right. There we go.
All right, give me 1 second here. I'll get my screen set up. So that you can see the best things here. All right. A lot of what was already discussed, I will just be doing some repeats, so I'm just going to highlight on a couple of features. I do want to point out that all of this material will be either in the handout section here inside the webinar, and we will have additional information that I will email out to everybody along with these files. So if what you heard was too fast or too much for one session, that's fine. We have a whole week to go through this material, formulate your game plan. Remember, trade accordingly to your style. We're just offering watch lists and information that can help you make better decisions and give you an opportunity to see what we're doing as well. Just a little bit of a recap of what was already talked about. So I'm going to adjust one thing so I can see my bar here. There we go. Okay, currently I'm going to be watching the following pairs. Aussie CAD, looking for on the day chart, excuse me, on the week chart, excuse me, we've got some convergence taking place. Day chart is also confirming that we're potentially headed for some longs with the Lake 2 setup. Excuse me, I didn't mean to jump off that chart. We'll be watching for the break of this fractal, but we are headed into some congestion on that day chart, so that may be a little bit of a challenge. Aussie dollar is another one of interest. I've got audio alerts set on this one as low as the 30-minute to try to give me a heads up. You can see the markings that will position those once we set them up. I haven't got them set until after the watch list webinar is over, but they are set, will be set at 0.73858 and 0.73979. Again, this will be in the handout, so you don't have to worry about recording that right now. The Euro CAD, I'm watching for potential shorts. The Euro New Zealand, there's some divergence there. I'm going to jump to that one really quick. The Euro New Zealand, I've got an audio alert target at 1.64228. The pound Aussie, I have audio alert set here for the 4 hour, and we'll be watching closely there. And then again on that is at the 2.10475. And my potential target will be down here if we get any 5-alarm setups on this lower time frames, but this is my heads up range to look for. The pound CAD, was one that I just entered while doing my trade, my watch list. Is still in potential range right here for anybody who's interested. Again, trade this accordingly. No buy, hold, or sell recommendation at this point. I want to make sure that you are aware of what I'm doing when it happens. And this is something I decided that it was worth the attack at this point. Got my stops set and my take profit as well. We'll watch that, manage it accordingly. Another one that I just entered based on my watch list is the pound Swiss. This one was entered based off of the 1 hour. Things have changed since the entry, so letting it rest. So I would suspect that we're probably in for a rest here or a little bit of a retracement. Trade accordingly, watch and govern this if it's something you want to attack. Then the pound New Zealand is a pair that I am in from last week. I'm currently up, was up, I should say 140 pips. It's sprung back a little bit. Let's get a measurement as to where I'm at. We're looking at about 100 pip range. We'll be watching this one. I'll manage this one a little bit closer after the session's over to see if I'm going to stick into it through this retracement here. I know that Natalie was watching this one for some potential entries, so it is a potential to watch still. If I end up getting out of this to protect profit on this particular position, I will keep this one on my radar for potential re-entries. One more of interest is the US yen. We had divergence on the weekly chart. Let me get there really quick. There's divergence here. And so I want to watch to see what's going to happen. Just as Natalie did, she's got some audio alerts set. I've also set the audio alerts, or will set them here shortly, at 126.153 and 120.209. You just keep my eyes on the horizon for this one as well to potentially unfold. As far as weekly early birds, we have the Aussie Swiss. There's also a blue light special long on that one, so I'm looking for some potential opportunity there. The Euro Aussie is early bird short with potential for a leg 2 fractal break. Audio alerts are set. Let me go to this one in particular. I am going to be watching these Euros, these Euro pairs based on the information Clark shared for long-term short positions. I'm in this position already, but I'm also looking for additional add-on opportunities with the fractal breaks. If it breaks long, then I'll know that I'm in a tight spot with this current position. but the audio alert will alert me if that gets to this point, and that point is 1.41653. And if it goes short, still my additional entry point would be 1.40349. The Euro Swiss is flat, even though it had an early bird going short. The Pound US is mixed. It had an early bird short. Let me go to that one. It's slightly of interest for me at this point. Okay, we're on the week chart. It looks like it's waffling back and forth here. There is currently a 3-bar early bird pattern on the price bars, but the angle is not good, so I'm going to call it a mixed pair at this point and not really spend too much effort on it until I see something different develop this week. The New Zealand CAD was also up with a 3-bar, an early bird, excuse me. Let me get the right time frame. There you go. There is a 3-bar early bird here for potential long. I've got a fractal. See on the day, yeah, on the daily, there's a potential fractal break right in this range. You drop down to the day. That audio alert is set at 0.85822. That's of interest for me to be watching. And some potential fractal breaks that are worth looking at. A weekly New Zealand yen and a New Zealand dollar and a Euro Swiss. And I'm not going to show those charts, only just know that at this point they all look very similar to this on the Norwich or the trend alert, is that we have the fresh early bird there, and up since then these were all red up to the week being green. So it has changed a little bit, so there's some potential to look at that one for the longs that I'm wanting to see set up there. The New Zealand dollar was an exact mirror copy of the New Zealand yen. A strong trend to pay attention to would be the US yen at this point. Again, I'm going to focus my efforts on the euro dollar or the euro pairs for some long-term short positions, looking for the proper setups and signals. Are there any other follow-up material information that either Clark or Natalie want to share before we close today?
Well, if I may, I'd just like to say I've attached a document which gives weekly and monthly AAs that anyone could like to download. It's based off support resistance zones, based off fractals. That's basically it.
All right.
So it's there for anyone to download if you like.
I'm going to finish. I'll finish rendering this video. While it's rendering, I will be typing up my notes and will be attaching all of the documents in the handout section here, as well as adding mine to it and emailing them out to everybody in the meeting, so that if someone's not able to access them here, you'll still get them coming to you. But I do want to get my audio alert set before I get too far behind in my process for the day, and make sure that we get this out in a timely manner. Clark, is there anything from you?
No, that's about it. It will be a bit slow week. However, keep in mind that any major deviation from expectations will be a surprise to the market and could add some additional volatility. So keep your eyes open.
Excellent. Thank you very much. Appreciate everybody's involvement today. Please give us feedback, comments, send us an email letting us know how this helps you and gives us an opportunity to see where we could possibly improve in our material presentation and getting the right information to you that will help make a difference. If there are no further questions, I'll leave this open for just a couple minutes so I can gather the emails I need to make sure that I have everybody here to send to and to get these documents downloaded for myself so that I can get them on the email. Give me 1 second. At this point, I'll just leave kind of open-ended or an open forum. If anybody has any questions, type in. It may be a little bit of behind the scene chatter here as I get these downloaded. There are only 4 documents, correct, guys? Or is there 5? There's 5.
Only 4.
Oh, only 4.
But we can attach a
Oh,
maximum of 5.
we could add one more. Okay, never mind. All right.
Mm-hmm.
All right, I've got those done. Once again, thanks everybody. I've got this set up. I will go ahead and render this recording so it'll be up on YouTube. I'll email out that link to everybody here so you can review this at your own pace. And have the information attached in an email, including my notes as well, so you'll have all the documentation that we're working from. Appreciate your involvement. Look forward to trading with you throughout the week. Thanks, Clark. Thanks, Natalie. Appreciate you.
You're welcome.
And your efforts. And we will talk to everybody throughout the week.
Thank you.
Happy trading.